Hey guys, Matt here. Welcome back to this week's portfolio update. I gotta say, things are looking a bit better, like especially by the month. Like I don't want to, I don't want to ruin anything. I don't want to jinx everything. But I mentioned this a little bit in the AT&T video that I we're definitely not out of the woods yet, but I think we're starting to get to the point where some days may not be as bad as others. Where previously it was just down, down, down. Some days are actually meeting some resistance. If you take a look at my portfolio here, like Givo has actually been inching its way up a little bit, which I'm happy to see. We got AT&T. I made a video about this yesterday. AT&T reported some pretty strong earnings. I gotta say, I'm happy to see it. Tesla. Now, the media will have you believe otherwise, but Tesla's earnings were pretty strong. They missed some revenue, but we're talking about a 50%, what was it? 50% year-over-year revenue? I'm not looking at the numbers right now, but yeah, nothing's wrong with Tesla. We got Verizon, which we're going to talk about in a second, whose earnings were kind of a mixed bag. There are definitely some things to be worried about with Verizon. We'll talk about that in a second. Walgreens is on its way up. Like things are kind of, I guess not as bad as they could be. And of course, now that I said that, they're about to get worse. Now, as far as Verizon, if we take, they're down 4.4% today, and I think that's just above a new 52-week low. I think that might be, a 5-year low, maybe more than that. And if we take a look at the earnings, EPS and revenue, they beat on EPS and they beat on revenue, which is good to see. Like the earnings were, I wouldn't say they were terrible. There are just a few problems. The first problem is this. So this is their income statement. If we take a look at the revenue versus last year, they got more revenue, but they got less operating income and less net income. Now, the good part about AT&T is that AT&T's whole thing is that they're becoming a linear company, and as a result, they're doing more with less. If you take a look at their previous earnings, you will see that AT&T is obviously making less revenue because of, they got rid of Warner Media and stuff, but you can see their earnings are keeping up. Like some quarters, they had less revenue, but even more earnings than last year when they were making, you get the deal. Verizon has a problem though, is that so instead of earning more with less, they're doing less with more. Like they're making more money, but their bottom line is suffering, and that is a huge problem. Now, I wish I could say that the earnings drop was due to the macroeconomic headwinds and all that stuff, and it partially probably is, but a lot of it is, I think, Verizon's own strategy. This part sums it up right here. They only added 8,000 postpaid phone subscribers, where analysts have projected 32,000. That is a huge miss. And the reason for that is they lost 189,000 customers in this consumer business. That is a huge drop. And a lot of it is its own doing. Now you can see it here directly from Hans is they made a lot of price adjustments. Now you can see up here they offer some discounts, but they also raised prices some places in an era where like competitors are trying to encroach on Verizon's market share and all that stuff. In an area where Verizon should be keeping their prices low, they're raising it in a lot of places, and that is causing a lot of customer drop-offs. Now, according to him, and this was touched on in the Q&A, that this was part of some deliberate strategy to win out over a period of time. Now, it definitely is not working for this quarter, but I'm gonna stay invested in Verizon for the time being. Like, I've never been a business owner, so I probably don't know what's best for Verizon. I was wrong about AT&T with the Warner Media thing. I said Warner Media was them letting go to Warner Media was a bad thing, but that turned out to be a good thing. So I might be wrong about this. It's just that I hope Verizon's decisions pay off in the long run. I hope it works out. So as far as their balance sheet, assets to liabilities remain good. Debt is dropping, although not as much as AT&T and not nearly as much as I would like at all. Now, I do know that, and this came up in the earnings, that Verizon is still paying off a large part of its 5G stuff. Now, Verizon, as you probably know, Verizon and AT&T bid on some 5G rollout last year. Verizon won, but as a cost of winning, Verizon has to pay a lot more money on the 5G rollout, which they're still doing. They did mention that next year that's supposed to stop, and once that stops, that there should be some cost savings after that, and then hopefully some benefit from that capex. So, what am I doing with my Verizon shares? So, I mean, normally in this circumstance, yeah, this would be a great time to buy. I'm kind of on the fence. I don't know because I don't know if I agree with the path Verizon's taking. Like, I'm not going to sell, not anytime soon. And if I did sell, it would be to combine this to AT&T, so I only have one position in this sector and not divvying between two. But for now, like, I'm probably going to hold on to Verizon. I don't know if I'm going to buy some more shares. Like, I need to see a little bit more because this quarter, last quarter, Verizon, in my opinion, has not been on it. But anyways, take care, have a great day, and eat your vegetables.